On June 26, we saw Bitcoin crash 18% in 10 minutes. That's an almost 20% decline in a single asset's value in literally 10 minutes, which is a truly horrific bit of price movement. This all coincided with the shutdown of Coinbase in the early afternoon on the 26th. Now, I don't know that the shutdown is entirely stood by the general marketplace. Clearly, Coinbase knows what happened, but I don't know that they've been really forthcoming with all of the information to describe exactly how this played out. But what we saw leading up to the moment when Bitcoin crashed and Coinbase crashed was a tremendous heavy influx of volume. What we saw leading up to this is a heavy influx of volume as the market rallied, and that heavy volume put stress on the system. So this, to me, raises an issue, a kind of a chicken and the egg situation. In other words, did heavy volume, poor liquidity, and an overabundance of orders cause Coinbase to shut down? Or did Coinbase shut down because, on their own right, because they had a tech issue, and then with the fact that the system was down, then caused a panic and a huge influx of orders in the aftermath? I don't know if the shutdown is entirely understood by the general marketplace. What we saw leading up to this was a heavy influx of volume as the market rallied, and this put stress on the system. And this raises a kind of chicken and the egg situation. Did heavy volume, poor liquidity, and an overabundance of orders cause Coinbase to shut down? Or did Coinbase shut down on their own right because of some tech issue, and then in the aftermath there was a heavy influx of orders? So in either event, we saw an exchange go down. That should not happen. And I don't believe this is the first time that Coinbase had some kind of outage. And secondly, we also saw a tremendous amount of volume over that time, which coincided with the crash in a major source of liquidity. Now that said, no other exchanges crashed. To name a few, Binance, bitfinex, Gemini, etc., did not crash. It was only one that failed to execute orders. There still needs to be a major reformation in the crypto infrastructure. So A, there doesn't exist these kind of outages in a highly volatile market with tremendous price movement. And B, there needs to be other infrastructure that can help people cope with times of such duress. Within the exchanges themselves, there's certainly different things that could be done to help mitigate, if not absolutely prevent, this type of price volatility. Aside from the tech not going down to begin with, there could be market structure in place that allows for heavy volumes and large order sizes. That can be done with different order types, like an iceberg. It can be done with rules like speed bump. So they regulate the amount of orders that come in, put them in a queue, and manage that in a more systematic and fluid fashion. But also, traders need access to all the other markets at a time like this, so that when one market goes down, they could quickly get into other exchanges and other sources of liquidity and trade in and out of their positions. If Coinbase is down, quickly jump into Binance or Gemini or some other exchange and liquidate and trade their positions there. So the best way to do that is with some proper functioning technology like an OEMS, which is an order execution management system, which is what Tiger Trading is, that gives you the pipes, the highway into all of these other liquidity sources. This way, when there's a hiccup or a crash in one venue, a trader can seamlessly place orders into another venue. Regardless of whether you have a position on Coinbase, when it crashed, and you need to get out of that position, you're still leaving a lot of money on the table by not having accounts at other exchanges. If you're astute, paying attention to the market at that given point, and you see Coinbase is down, and you have some technology that gives you access to other exchanges, then you can quickly jump in, take advantage of the price action. There's several things you can do. Well, you can play defense and get out of your position, albeit in a declining market, but perhaps with some better result than just sitting and waiting for your trade to get done on Coinbase. But there's other more proactive type of trading posture that you could take, like trying to sell ahead of the move or during the move as other people are panicking and the move continues to get over-exaggerated, or take advantage of the collapse and look to put some bids in some markets that are looking to be more stable. I like to compare crypto exchanges to what I call the mature capital markets. By mature capital markets, I'm simply referring to foreign exchange and equities because they're the most electronified and have been trading electronically for probably about 30 years. you don't see those exchanges go down. And if you did, for a moment perhaps one would have some kind of lapse. And while if an exchange did go down in any kind of problematic way, well, that could be a much larger problem than the variable price action in a moment. But if that were to happen, the markets trade globally and seamlessly, and liquidity is picked up very quickly elsewhere, and in a pretty seamless fashion. So while there might be some disruption in one of these other mature capital markets, say an equities exchange, for example, you wouldn't witness a 20% decline in 10 minutes. There would be a much more mild effect, and whether it's liquidity being picked up in a different exchange or circuit breakers within the exchange that had the problem or a quick fix, they're much more equipped to handle these type of issues. Part of that is singularity in protocols and connectivity. For example, fix 4.4 into all the different exchanges. But regardless, it's something that doesn't yet exist in our space, and we at Tiger Trading are making big strides to promote more consistency among liquidity and to help people trade out in multiple venues, particularly in times of trouble and distress. Thank you. If you have any thoughts or questions, please comment below. Have a look at tigertrading.com, sign up for the free beta, and you'll be able to experience firsthand how an OEMS functions and how it will help improve your trading experience.